Hey everyone, welcome back. So this is going to be a little bit different video. It's going to talk about why Bitcoin mining, for me at least, is done for. I've been doing it for the past 5 years, and I'll go into the story behind it, how I got into it, how we did, what we did wrong, what we learned. Most importantly, what we learned. We learned a lot, but we'll just go through it all. For us, it's actually going to be done for this year. Look at the numbers. We'll take a look at some of the numbers that I have for you guys to show also. It's just not going to be possible for us to make a profit anymore. So let's get into it here. So as always, this is not financial advice for entertainment only. You know the drill. I'm investing in companies, even though we won't talk about any other companies here. I just want to point this out to you guys. And let's take a look at what I have prepared for you guys. So this is the crypto mining farm that I was managing for a friend of mine who invested a lot of money into it. Unfortunately, we were not able to recoup all that money. And there's a couple of reasons why. But we'll get into that. So it's been 5 years. We started this back in 2017. We're done basically as of pretty much 2 months ago or so. We're kind of hoping that Bitcoin would maybe rebound, but it's not happening. Also, we've seen the hash rate increase quite substantially, which is obviously making it a lot more difficult to mine. So this is what it looks like at night. It was quite a beautiful scene when all the miners were installed and running. It was quite beautiful at night, I guess you could say. So here's how we started out. Excuse me. So in the spring of 2017, this was early spring of 2017, we started testing. We got some L3 miners. I think we also had we had an L3 miner. We had the S19 miners as well. A couple of those, you can see them here in the picture. And I'll try to point these out. So these down here were the S9s. Over here was another S9, and then we had an L3 up here, I believe, that was running as well. We also had some GPU miners that are off the scene here. You can't see them, but they were off to the side. Now, these machines were extremely loud, generated a lot of heat. It was kind of nice, especially in the early spring. Weather was a little chilly, so the basement was nice and warm. It got a little too warm. We actually had to open up the windows down in the basement, let it kind of air out. But here's what we were kind of looking at when we were getting into this. We ordered basically 200 of the S9 miners right around this time frame in the spring. They were generating around $35 per day on average for quite a long time, or quite a few months. Sometimes it would go up a little bit, sometimes it would go down, but on average it was around $35 had we had the miners installed at that point. That equated to basically $210,000 in just pure revenue for the month on the S9 miners by themselves, if we had them installed at that time. Next, we also ordered 220 of the D3 miners. Those were the miners for the Dogecoin. They were, when the miners first came out, they were north of $200 per day if you were able to get these miners. And then they quickly dropped in profitability as obviously the days, weeks, months went on. And by the time we got them installed, it was nowhere near this. But that would have equated to 1.3 million in revenue a month just on those miners alone. Then we also had ordered some 35 of the L3 plus miners. Those were Litecoin and Dogecoin miners. They were making just barely, I believe, a couple of dollars at that point already. I think it was like $8, $10 or something like that during that time frame, if I'm remembering correctly. Obviously, this was 5 years ago, so my numbers might not be exact. And then we also had some of the GPU miners for Ethereum mining. We ended up getting basically 130 graphics cards. We had 20 GPU miners set up for that. Those were pretty much profitable throughout this whole period. The D3s went pretty bad pretty quickly here. Before we were able to get them installed, build out the farm and everything else. That took a long time. So the profitability on those dropped really quickly for us. So that was one of the lessons learned here. Let's go on to the next slide. Okay. So here's summer, fall 2017. We ended up purchasing about 4,000 square feet unit in like one of those industrial complexes. The nice thing about it was we were able to get, obviously, electrical hookup for it for what we needed. They were supportive of that, supportive of us putting in vents and exhaust fans or fans in the ceiling to do that as well. So this is why we chose this facility. We thought this was going to be a faster route to go than buying land, trying to build out on it, but that's another lesson that we learned on it as well. So now we're down to the summer, late fall. the 200 S9 miners at that time were only making $13 per day, roughly, as the network's hash rate increased obviously tremendously as the S9s were coming online. And then the D3s were pretty much down to like $5 a day. So a big difference from $200 a day to $5 a day, 1.3 million to 33,000 a month right now, had we got those installed then. But obviously things take time, planning, resources, everything else. This took us a lot longer than we were expecting. So this is what it looks like. We started out with, you can see here, all the cables running to the GPU miners that were getting installed here. And we were just running what we could with the power that we currently had installed there. And this was just regular 220 watt or 200 amp service I think we had in there at the time. Next, if we take a look, and you can also see here some of the S9 miners were coming in. I think these were the S9s, or the D3s were coming in as well. So we're getting those unboxed and getting them possibly ready, to get them installed and running as fast as we could. Next, you can see the setup here that we did on it. So obviously this was pretty much all handled by me and another person, my friend, the investor. He was just basically the money guy in this. He put a lot of money into it, and he left it up to us to obviously build it out for him. So we can see here that we had 20 by 6 GPU miners. Those were generating between $14 and $18 and $8 a day on average throughout this whole period. They've been very profitable, and you can see, obviously we know now, or at least I know, why Hive Hut 8 went into GPU mining, because it's just so consistent revenue. Also, the electricity on these was a lot lower draw than on the ASIC miners. And you can see on top here the miners that we built for testing at home first. And then we obviously put them out here in these racks that we bought from Menards. And not a sponsor, but we just bought these at Menards. And we started putting these racks together for setting up the farm, basically. And then we had the cards basically hanging here, so we get plenty of airflow through them to keep them nice and cool. So this was like the beginning phases of everything starting out. This is obviously getting a little bit more exciting here. We got electrical connections from the outside going into the inside. There's going to be a lot of watts going into it here, a lot of amps as well, to drive this whole setup here. So here's the basically breakdown of the costs of what everything cost. So the unit itself cost $200,000. That was just to purchase that out, and then electrical and total was $300,000. The ventilation for this unit was $100,000. For the miners, my friend spent about $1 million on those, so it was a total of $1.6 million total investment on this. Pretty pricey, obviously, for not being funded by anybody else, being funded by yourself. That was obviously a big gamble that he took on it, and we really thought we were going to be able to do this. I think the timing of this was just not in our side, basically. Here's another look at the farm being built out. You can see more racks being installed. Obviously, the miners getting ready to get installed, and we kept them in these little foils, plastic wraps, to keep the dust off of them while the construction was going on. So you can see conduit here starting to come up, these supports for the conduit as well. We can see some panels back there as well being installed already. So we're getting closer and closer to this, and this is obviously winter of 2018, so right around January, February, right around that time frame. This is still same time frame right around there. Construction build continues. You can see obviously the miners getting installed. You can see more of the conduit for the electrical getting installed, and we added this backing, this black backing back here, which was basically a sound insulation. So once the miners are operational, they're not going to disturb our neighbors next door to us. That was another, and I think it was included in the cost, but it was like another $6,000 to do this soundproofing for the unit. Next, here's some more of the pictures of the miners, of the GPU miners fully installed now. So you can see here we had basically 20 of them up and running. And they were obviously helping out, generate a little bit of an income while everything was being still set up and installed. And then some bad news came into our farm, basically. The electrical components that we needed for the cabinets to get power to our unit not only were they delivered late, delayed by a couple months, but they also came in damaged, which also set us back. So then we had to send these units back. You can see the damage on them. So we didn't want to install those. We sent them back to the supplier, and that took another, I think, 6 weeks before we got the new cabinets delivered to us, and finally got them installed. But like 6 or 8 weeks, something like that. So you can see all this delays and everything else is starting to add up. Now we're into 2018. Obviously, you know what Bitcoin has happened. It basically peaked in 2017, and then we started going back down in price in 2018. So there's that part of that problem that we ran into. Spring of 2018, you can see pretty much all the conduit is in now for the miners. We're getting outlets on everything hooked up. We're now just waiting basically for energization of the unit. We're still a little bit out. And then one of the things that we wanted to do was obviously keep the cost down as much as possible. So one of my challenges was, how do we control the ventilation in this unit without having somebody there 24/7 basically? So I came up with a solution where you can see here this little display, and then you got these little 4 boxes on each side. So we have the ones in the middle here, the 4 red boxes are basically the 4 fans pumping fresh air into it. And then the 2 outside boxes on the top and the bottom are for exhaust. So whenever you turned on one of the fans, you also wanted to turn on one of the exhaust fans. So you have equal airflow, right? Whatever's coming in, whatever's being pushed in is also being pushed out. So the fans that we do have on there, I believe, are 30,000 CFM fans, which are huge. They are very, very, what's what I'm looking for? Power intensive to get them going, but once they get going, they're a little bit better. And then we have obviously these 4 or 8 controllers for them, which are hooked up to this little Raspberry Pi that I built. And you can see here that we're just using a little electrical component controller, which I can control with the Raspberry Pi. And then I also set up some other Raspberry Pis for other Raspberry Pis within the unit to let me know what the temperature is basically at each part of the unit. And then we could dial in the fans as we wanted to. So if it was getting too hot, we could turn on fans and exhaust. If it was getting too cold, we could turn basically the fans off and exhaust as needed, pretty much without any intervention by anybody else. The only thing that I did set up was if any of the fans did not kick on or the temperatures continued to spike, I set it up to basically email me that letting me know, hey, there's a problem with the farm. I needed to go check it out. So, I mean, this was something that was really beneficial to us to keep costs down. Like I said, it basically automated the process for us, controlling the temperature in the facility. So this was obviously a pretty time-consuming thing that I ended up doing on it, but I've learned a lot from it, obviously programming it in Python and PHP and everything else. I've had experience with PHP before. Python was a little bit new to me, but we got it all to work with this controller and the Raspberry Pi. And that didn't take a lot of watts at all. I mean, that's basically just a little Raspberry Pi that takes 8 watts, 12 watts or something like that to operate this little guy. And the screen would go dark when it wasn't being used, and I could control it also from home. So I could see what's going on via VPN into the building, to the unit, to see what's going on with it as well that way. So that was a real nice feature that we added into it. And you can see here the panel here being getting ready to be installed. Those things are massive. They got some massive bars inside that are like 3 inches wide, almost, I believe, a 1/4 inch thick, that connect to the outside transformer. And we'll talk about that in a little bit. So that was that. Also, another thing that we automated a little bit was to see our progress. So I created basically a server and a website in that facility to monitor what's going on with the miners, as far as how many are operational, how many are not operational, what are we making on each miners, what are the temps inside the building here. So you can see here we got basically temps being updated every 30 seconds, and we can see what's going on with it. So you can see here at 75 or 69, temperatures were rising, and then we obviously turned them off or on as needed for it. So that was also a big benefit, to see everything that's going on remotely in the farm. Again, keeping costs down, keeping it, as little overhead as possible. Next is spring 2018. So startup April, we got everything energized, and this is what it looked like. So the red miners are the D3s, the green are the S9s, and then we also had the L3s, which were back over this way more. But we got everything energized. We were making approximately $68,000 in revenue. And this does not include electricity costs or anything like that. This was just pure, just revenue, gross revenue. Didn't include electrical in it or anything like that. So this was obviously an exciting time for us. And then we get into this problem here. So our electrical company provided us with a transformer that was too small to handle the tasks that we had required of them. The transformer started overheating. One day I go out just to check on the farm, see what's going on out there, and I hear like something's boiling, and I can hear this water kind of like boiling in here. And then I look around and I see obviously this puddle of liquid, which I think is mineral seal or mineral oil, something like that, that keeps the transformers cool when obviously temperatures are high. So automatically had to shut down everything, the miners. And that took another couple of weeks for them to change this out for a new unit. So that wasn't obviously good as well. And not having any prior electrical engineering or anything like that, this was obviously new to me, so we learned as we went along, unfortunately. Obviously, this bigger guy here was more than capable of handling what we needed, and it ran fine after that. But that still delayed us another couple of weeks to get there. So this happened obviously as temperatures started getting higher. It wasn't able to cool itself off, so that's why it was basically boiling the internal coolant in it. All right, so that was another lesson learned there. Next, the miners are continuing to obviously mine here. They're operating. One of the things that we learned here during the summertime is that the airflow, you can see here from the vents up top, we had 4 of them along this whole row here. That was a fresh air intake, the cool air. That, when that was coming down, was not being concentrated enough in this row, and it was just going through these miners, and it wasn't doing a really good job of cooling the miners. So one of the things that we did was install these kind of sheathing, backing board, whatever you want to call it, insulation on these miners in the back, and that actually kept that cool air in that channel, and then pushed all the hot air through the miners, or cool air through the miners to cool them off and blow it out, and then the exhaust on this side were actually pulling it out. So that worked out pretty well for us there. So you can see it here. We cut out all the little holes for where all the miners are. That was very time consuming, but we got it done. And then we have miners over here, and you can see the vent up here a little bit, basically. We got everything cooling a lot better that way, especially at temperatures reaching 90 degrees. We wanted to keep the farm running to generate revenue to pay off, obviously pay down or recoup, obviously, the investment in it. But that was just our efforts to do it the best we could. Electrical issues. Okay, so here's another thing that we ran into. Let me see here. The electrical company that we had for this, they did not provide us a bill for 5 months. We called every single month. After the second month went by, we didn't get a bill. We kept on calling like every week, trying to figure out what the heck is going on. Why aren't we getting a bill? Why are we not seeing what we're actually being charged for electricity? They told us at the time that we're supposed to be getting a better rate because we are going to be using so much electricity, and that we're basically new on the system, that they don't have their PMLs, I think they call it, or PMJs, whatever the heck they call it, set up yet for us. So we're going to be getting a pretty good rate. So we wanted to see what we're actually getting to see if we needed to find another supplier of electricity. With them not being able to provide us the bills for 5 months, we were basically going at it blind as far as what is our net income after electrical expenses and everything else. And we finally had to take them to court. And one of the things that they were saying to us was that they think that the meters are not working properly, that they couldn't figure out why we were pulling so much electricity. Even though we kept telling them that we're using a lot of electricity, we were doing Bitcoin mining, things like that, they still couldn't figure it out. We called the guy that was in charge of installing the transformer, everything else, to see if he could help us out, get this resolved. We called other people as well. We couldn't get this resolved. Finally came down to it. We ended up getting a bill after 5 months for like $180,000. We're like, well, if we knew it was going to be this much, we would have went with a different supplier. So we went to court. We did get it knocked down to 10 cents on the dollar, basically. But it still cost us, obviously, legal fees, everything else, time, and just energy wasted that could have been spent on something else. So that was another lesson learned there. right? So we'll get into all the lessons that we learned along the way. Next is, okay, so this is basically looking at the uptime of the farm based on the year, what was going on at that time, and Bitcoin price, and everything else. So we know in 2017, Bitcoin peaked at basically 20,000. After that, it fell down throughout 2018 and 2019. Finally, later on in 2019, started kind of rebounding a little bit. But basically in 2019, we were on and off for about 5 months of mining only. So we only mined for less than a half a year because it just wasn't profitable for us. Obviously, during that whole time, the network hash rate was going up, regardless if we were mining or not. So we had to make the choice whether it was, make a profit or mine and hodl and then hope Bitcoin goes back up. Well, we couldn't afford that. Everything that was put into this business was already put into it. There was no other capital to keep the lights on, basically, if we did that. So the only thing that we did here was mine Ethereum at that time, which was still pretty profitable and pretty inexpensive as far as electricity costs were concerned. And it did help us cover basically the electrical costs, the association for the building, and some other little bills, internet bill, other things like that. So that at least helped us get through the hard times there. 2020, same thing. We were on and off basically and mining only for 3 months in that year. So we were pretty much shut down for almost a year, I think, with nothing going on other than just Ethereum mining as well. So that was obviously, we were in that bear market still. And then obviously then into 2021, when things started switching around a little bit, we were able to mine for about 12 months in 2021 as Bitcoin was going back up in price. It finally made sense for us to do it where we were profitable and we could do it. And then going into 2022, we were only able to do it for 3 months, as obviously we peaked in November of 2021 with Bitcoin. And then the price started falling down drastically while the hash rate continued to go up. So that wasn't good for us either. So in all, you can see how sporadic the mining is here, especially with pricing. Also, pricing electricity, the best rate we could get was, after that whole fiasco with the not getting the bill, we changed suppliers for us. We did get a 6.5 cents per kilowatt hour rate. That was only good for two or three years, I believe, 3 years. That would have been 2018, 2019, 2021. Yep, and in 2021, it basically got switched over to a new rate. Unfortunately, we had to go with a new rate. Now we were at about 8.5 cents per kilowatt hour. So that obviously hurt us as well. Let's continue on here. So lessons learned. Build out and invest in bear markets. So one of the things that we obviously screwed up on was we were trying to build out in a bull market, basically towards the peak of it. That was one of the biggest mistakes that we did. Trying to build out in a bull market when we should have possibly held on to the cash, maybe got in the building or something like that, or bought land at that time and prepared for the next bull run and waited for the bear market to kind of go through its paces. The other thing we learned was obviously land, modular expansion, no units. The units themselves, retrofitting them for the needs that we needed was costly. One of the things that we also had to keep in mind was the units all had sprinkler systems in them. So we could not let the units get too cold, or our unit at least get too cold to where the pipes would freeze. So that was one of the other things that we learned. Electrical components was 6 months out plus, and then you also run into delays. That is one of the things that contributed the most to us not being able to mine as quickly as we wanted to, right? Had we gotten installed at the early spring, maybe even mid-summer of 2017, we would have done a heck of a lot better, possibly to the point where we could have reinvested some of the capital instead of trying to get a return on investment basically the whole time. That's kind of what we've been chasing, is trying to at least get a return on investment on it, which we haven't been able to. Fixed long-term electrical pricing is the other one, obviously. Had we known the issues that we had, we would have tried to get maybe a 5-year contract or something like that, or something a little bit longer, but that's hindsight. You won't know that. But from the beginning, we didn't know what we had until it was too late. So we learned on that one as well. Next one is do not invest in miners for altcoins. So the L3 and the D3 miners, especially the D3, those were crap. Once we got those energized and going, we were only mining with those for maybe 4 to 6 months, and then they were no longer profitable. The other issue that we ran into was out of the 220, we only had about 140 that were operational by the end of it. They were just not as good as the S9 miners. They kept breaking down, the boards kept breaking down on us, and it was just a bad investment. It looked like a great investment in the beginning, obviously $200 per day, but once everybody and their uncle got it, the efficiency on those went way down, the difficulty went way up, and you weren't profitable on those. So that was a lesson learned on that one. And another thing we learned is reinvest about every 3 to 4 years in miners if you can, right? We've been trying to at least recoup the investment in it. Couldn't do it, so we couldn't reinvest it into basically new miners that we needed to. So this is one of the reasons that we're down basically for good now. Automate to keep costs down. So that was obviously a big help to us, keeping the costs down, not having overhead for that for people or anything else. Monitoring it, we could monitor ourselves. I could swing out to the farm whenever I wanted to. I live pretty close to it, so that was advantageous to us. I could, go back in, turn off miners, turn them back on if I needed to, and that obviously helped a lot. So keeping overhead down, automating things is a big plus that I've learned. What else do we have here? Sell daily. Bitcoin has huge swings. So we thought that, or at least maybe I thought more than the others, that keeping the Bitcoin price, or keeping Bitcoins mined until the end of the month to sell them was possibly better. We learned that's not the case. It's better to possibly sell them at daily because Bitcoin does have large swings in it. Throughout the month, it could be, at 1.13 thousand and then down to 11,000 at the end of the month. So you just lost basically 2,000 per Bitcoin towards the end of the month if you wait and sold. It's great if Bitcoin's going up in price, but it still has huge swings. So I think selling daily is a way to go. And then price protection of the miners, we basically bought these on spot. We didn't have obviously the huge, 50,000 miner orders that like some of these other companies have. We had to pretty much buy on the spot. So we basically paid spot pricing on it. I think we paid like 2,000 plus per miner. And then obviously came way down in price. So biggest takeaways is obviously do not build out in a bear market, or build out and invest in a bear market. Do not do it in a bull market. Prepare for the bear market and basically build out during that time frame. So that's one of the things that I wanted also to mention is that the current miners that are hodling, waiting, whatever they're doing right now, I think they should be growing right now in this bear market. If they wait too long and Bitcoin starts going back up in price, it's going to be more costly for them to do it then. We're also possibly going to get some new miners. Right now, the best miner we have is 140 terahash miners, but I think eventually we will get to a smaller scale chips, whether it's the 3 nanometer or 2 nanometer chips that we're going to get in maybe a year or two. And those are going to obviously be more efficient, give us more hash rate and everything else. Right now, they're going to be expensive though. I think right now is the time to kind of invest for the next bull market, which we're going to probably get in the next year or so, year and a half. And then it's going to last about a year and a half. And then obviously at that point, you don't want to be investing at that time. You want to wait until the next bear market and then do it again. So it's been fun 5 years, I got to say. It's been fun, but it's also been very challenging. Trying to juggle a regular job, doing this mining farm on the side, family and everything else. It's been a challenge, but it's also been fun, and I enjoyed the learning process on this. And that's kind of where I'm coming from with learning everything that I've learned in this mining farm. I'm taking it over into now evaluating the other miners that are obviously public. So I hope at least that gives you guys a little bit of a confidence in when I review the miners and what I'm looking for in it. Obviously, I'm not always going to be 100% right. Nobody ever is. But I try to do everything based on data. I think data speaks more volumes than any talking points can. So hope you guys enjoyed this. Like I said, it's been fun, 5 years. I'm looking forward to the next 5 years, possibly on this channel. We'll see where this takes us. So thank you so much for watching. If you guys have any questions, I'll be more than happy to answer them down in the comments. And if you enjoyed the video, hit the like button, subscribe, helps me out tremendously. And I'll see you guys in the next one. maybe in the next 5 years.